Hello, everyone, and welcome to our Back to Basics Beginning Farmer Series and our Building Your Bench webinar with USDA. My name is Sarah Campbell. I'm the National Beginning Farmer and Rancher Coordinator here at USDA. So I do everything beginning farmers at USDA and work with staff across the department in our service centers, as well as our partner organizations. So we've got folks representing those today. And so here's our agenda and a little bit of housekeeping for folks. This webinar is being recorded. If you have questions during the presentation, please drop them in the Q&A box. And if they are ones we can answer kind of just in the box, we'll do that. And we're also going to allow some time for some great discussion and conversation at the end. So we'll be holding some of those questions back until the end of the presentation. But it is being recorded. All the materials and things that we mentioned are going to be made available to folks. But when we record these, we do caption them and then post them online. So it takes us a couple of weeks just to get that all done, and then they'll be posted on our farmers.gov YouTube channel. So folks will be able to watch it, download all the slides, all that fun stuff. So today we're going to talk about building your bench and why that's important, our state beginning farmer rancher coordinators, and then we're going to hear from our guest speakers, Nathan at the University of Minnesota, Chris from Farm Credit East, and Corey from Chappell Farms, and they're going to talk about different resources and how you can build your bench and sort of develop your support system as you grow out your farm business. I'm also a farmer, and the reason why we're having this webinar is, we like to joke like, farming is not actually the hardest part of getting started. It's really the business of farming is what tends to trip people up and is very challenging. And there's a lot of other parts in addition to the production and the drive and the tractor. There's your taxes, your record keeping, your business planning, your financing, your risk management. There's so many other things, and it's just really, really important to having a successful business. And you're going to want to have a lot of folks in your corner and build a really robust support system to help you in your farm journey. So here's just a few quick tips on doing business with USDA. Also, I will flag for folks, we are not going to be talking like super in depth on lots of USDA programs. We've done that in some other webinars, and we've got lots of resources online. So if we kind of breeze through stuff, don't worry, you can find a lot more information about it. We've done a whole webinar series on Back to Basics. We're continuing to do that, and it's all online, all those recordings. So I'm just going to hit some high notes before I hand it off. So when doing business with USDA, get a farm number. You can get that at your local service center. We've got a little sort of handy getting started with USDA document that someone will drop a link to here in our comments box that talks through the different documents that you need and how to do that. Use your EIN and business entity. A lot of farmers make the mistake of just using their own personal social and putting in their information when they're filling out applications, when really you want to be doing all of your business in your farm name, even with USDA. And if the employees give you forms that ask for your social, you can put in your EIN or ask for the forms that have the EIN box. So just a reminder, if you don't get that, you might need to advocate for yourself because some folks do prefer to do it personally, but recommend doing everything with your business. And as you're doing business with USDA, make sure you're using best practices like keeping a separate checking account for your farm business, keeping track of expenses, filing Schedule F, and seeking the counsel of all the experts that we're going to be talking to you about today. So who is in your corner? It really takes a village to raise a farm. So we're going to talk about some of these folks and the roles that they can play in your operation today, but mentors, we recommend having a mentor, a senior farmer, somebody who has been in the business who can help you along the way. Family, friends, and neighbors, folks you can turn to for support in your operation, but also just kind of like emotionally. Farming can be really hard and stressful, so you want to make sure that you build out a support system there and that you've always got folks to lean on and turn to. Your lender and your banker are going to be really important professional relationships that you have. Any other finance professionals that you're working with, such as a CPA, a bookkeeper, accountant. A legal professional, having an attorney, somebody you can go to help with leases and contracts and entity formation. Farm organizations, there's lots of different farm organizations, many membership organizations. Some of them are very niche and small and maybe tailored to certain types of producers, like a flower farming group or a veteran farm organization. And then some are nationwide, like Farm Bureau or National Farmers Union. So seek out those different groups, and many of those organizations host events and trainings and workshops too in your community. And then also your local USDA staff. And these folks are going to be really, really important, and we recommend having all of them. You want all the tools in your toolbox that you can have. I'm just going to speak really quickly too about your state beginning farmer and rancher coordinator. So every state has a beginning farmer and rancher coordinator. You can find them on farmers.gov/new farmers. And these folks can kind of help be your navigator or your traffic director. They can talk to you about your operation, help you kind of figure out maybe who you should be working with, and make referrals out to folks like Nathan and Chris. And so make sure you reach out to your state coordinator if you're getting started in farming. All right, I think in the interest of time, I'm gonna breeze through this, but I do want to flag that we've got a lot of really great resources online. I'm sort of broken out starting your farm journey. This is a screenshot from our farmers.gov/new farmers webpage, and we have resources on kind of all these big buckets of steps of the journey. So planning, finding your local office, getting funding, selling your products, maintaining your farm, expanding. So we encourage folks to visit our online resources and take advantage of that. Farmers.gov/new farmers is our sort of clearinghouse for all things beginning farmers. We also have farmers.gov/taxes, which has a lot of really great information and resources for new farmers and folks just getting started. And farmanswers.org is a very large library that has a lot of different types of resources, from videos to interactive worksheets. In terms of accessing resources in person, not online, we recommend reaching out to your local extension service, your local agricultural university. They might offer some classroom training, talk to other farmers, attend workshops and conferences. Again, work with that, have FaceTime with your local lender and other finance professionals, your banker, and your local USDA technical assistance providers. So if I was talking to somebody looking to get started farming in Minnesota, I would pass them off to Nathan. So I'm going to hand it off to Nathan now to talk a little bit about the work that he's doing and give some recommendations for folks, because he gets to work with new farmers every day in person. So thanks, Nathan.
Thank you, Sarah. Hello, everyone. I am Nathan Helensky. I work with the University of Minnesota Extension, and I do some work with beginning farmers. So I have a few resources that I would like to share with everyone. So, okay. So again, here's just my contact information. And all right. So, oh, we could go back one more. All right, so I am on the agricultural business management team within the University of Minnesota Extension, and we do a lot of farm management and farm finance topics. So a lot of farm bill education. So every 4 to 6 years, we get a new farm bill across the United States. We do a lot of the training on what new things are in there or what updates are happening. We had some updates recently federally that we will start be educating on farmers across the state what's going on. We do a lot of work on farmland rent and crop budgets. So if these are some of the questions that you have, our team can really help out with those. Fruit and vegetable marketing, and also cost of production. What is a appropriate price to sell tomatoes at the farmers markets? Some of these are a little tougher to come by versus looking at the Chicago Board of Trade, and you can see what corn and soybeans are priced today. Some of those not as widely sold products, a little more tougher to find an appropriate price. Grain marketing, and then also finances. So I think Sarah did an excellent job in her introduction on saying farmers want to farm and not always do the record keeping, do the taxes, understanding what their balance sheet, income statement, and cash flow look like. Our team does a lot of this education to help farmers gain this knowledge. Also, taxes. Taxes get to be complicated, and we do training through the U of M here on what are appropriate things to know and keep track of. And then another big thing we walk through is farm transfer. This is incorporated with beginning farmers because typically a farm transfers from parents to children, and helping that new generation get started in the farm business. We talk a lot about what is appropriate prices, appropriate tax implications, and just some of the interpersonal communication hiccups that can happen within the farm transfer scenario and how to make that go smoothly. And then also another thing we like to talk about are business structures. So are an LLC best for you? Is an S corporation, a C corporation, a partnership? There's all these different avenues that again are on the business side of things. And a lot of times, like Sarah said, farmers want to plant their crops, take care of the animals or drive tractor, not worry about appropriate business structures or tax consequences. So these are all the topics that my team covers in Minnesota. So the beginning farmer workshops that I personally have had a lot of interaction with is this three-part workshop series where we go over these topics of goals and business planning. So as you start out your farm business, what's your goals moving forward, right? Do we want to have 1 acre, 2 acre, 3, 4? What's the size of our operation and what's our business plan? What are we going to be making money on? It's great to have hobbies, but to run an actual business, it needs to stay profitable. So what's the business plan going to lead to and look like to have these sustained profits to stay in the farming business? Also, through these workshops, I like to talk a lot about finances. If we, as beginning farmers, want to apply for a loan, what does that look like? What documents are required that we bring to a lender? Whether that's going to be through FSA, whether that's going to be a different lending institution. You can't walk into a bank and say, I want $100,000 to farm. They're going to need more than that. And we like to go through examples of what that can look like and what the banker wants to see. Also, these ag taxes. Again, taxes are an important concept to understand. We need to have a grasp of what our taxes are looking like in order to best run our business. And then those business structures of LLCs, S corporation, C corporation, partnerships, there's different ones. What's the best for me moving forward for both liability protection and also for tax purposes and just risk management? And then we also like to talk about in these beginning farmer workshops, marketing. What is your marketing plan? Again, if we're selling tomatoes or spinach, that might look different from corn or soybeans, but we need to have a marketing plan no matter what crop we have. And then also land rent. What's our land access? Do we own land? Are we renting land? What does this look like? So that's what this workshop focuses specifically on. And we'll walk through some other helpful links in the next slide. So some other things that the University of Minnesota does is there is a specific small farm startup school. So it's offered a couple times a year. It moves across the states. It has been online previously. It's also can be in person. It just depends on what the team hosting this decides for the year. And this is geared towards small scale farmers. And there's a fee to attend this workshop. It's around $200, and it's pretty intensive, geared towards, again, that fruit and vegetable growers. And this is kind of ideal if you don't exactly know what you're doing with this fruit and vegetables that you want to grow, but you really want to have this be part of your business. They will really walk you through varieties, herbicide application, and the actual hands-on of the farming part of it. And it has a pretty good track record for being helpful. So it's a thing that the U of M offers, and I'm sure other states have similar resources as well. And business plan. So again, having a business plan is important, right? What are your goals? What do you want to do in this farm business? Again, is this simply a hobby, right? We want to have 5 steers that we grow throughout the year and sell them whenever they're finished. And we don't really care about making money. We just want to have livestock in the yard. Well, what is your plan? And eggplan.umn.edu has this great resource of writing your business plan. And you can see in the bottom, this is a screenshot of the website. There's tips, resources, samples, and comments throughout every section on this website. So again, if you want to apply for a loan, having a business plan that you were going to bring in completed to the bank office can be very helpful. So then the bank or the FSA, whoever you're borrowing with, understands what your plan is, right? How are you going to pay the loan back? This business plan will make that very clear. And it has, again, with the tips and resources, the samples in there, it's very easy to take what's written in there, copy paste it, and update it for your personal farm business. And it's a lot easier than starting from ground zero, right? We have a template that will really help us out. So I do encourage everybody to check out this Egg Plan website and think about what their business plan is. And next we have FinBin. So this is both crop and financial records. So it's very Minnesota heavy, but we do have approximately a dozen states, pretty Midwestern states in here. And this is a screenshot of the website, and it's county based. So if you are based out of Todd County, Minnesota, you can select that county, and it'll tell you the average yields for crop, or for corn, for soybeans, for hay, for the average production of dairy cows or hog operations or bee farms. So if we are starting to get farming and we say, you know what, I don't know what an appropriate yield is for my specific farm, this database is county specific, very Midwest heavy, with strong farm level data. So I do encourage people to check out this website. And with this website, you can do a benchmark report, and it'll break down the bottom 10% all the way up to the top 10% in these 10% buckets of the most profitable farms and the least profitable farms in terms of what is their yield, what is their cost of production. And the cost of production on corn can jump around from $2.90 to $6.60. We have a wide range of prices that we can really fine tune throughout that FinBin website. So I encourage checking it out. Transitions. So this is very similar to the Egg Plan website from just a few slides ago, but it's specific to transitions. So if we are working with our parents, our uncles, or grandpa, whoever it is that we're starting to get into this farm business with, we can write down some concrete steps about, hey, I'm going to gain ownership in XYZ via this mechanism, right? Where I'm going to buy 1% of the LLC each year for the next 20 years to get my, 1/5% ownership, or whatever the breakdown is. But it's, it puts it down in writing, so it's a lot easier for everybody to comprehend what's going on. They can analyze it easily. A verbal agreement is great until there's a disagreement and we can't quite comprehend what we agreed to. Where when it's written down, we all can see it and talk with it. or talk through it. Through this Ag Transitions website, you can share or add other collaborators to it. So you can have mom and dad, brother, sister all work on the same document, and we're all viewing the same thing. We're not each having our own file saved with our own edits. So it's very helpful throughout the farm transition. And the next resource I'd like to share here is, on the next slide, crop cost. So this is a cost of production tool. So this is fairly new. Throughout the University of Minnesota has created these tools that I'm sharing, but they're all free for anyone to use across the whole world. And here's just a screenshot of it where we have, in my example, I just have corn in bushels. So we can write down how many acres we're planting, what is our expected yield. Once we click through this website, we can put in all of our expected expenses. So what's our seed cost per acre, fertilizer cost per acre, crop chemicals, crop insurance, all these other expenses. This tool can help calculate them and then break it down into what is your expected cost of production. So if we know that our cost of production on corn is $3.80 a bushel, then we know that if we sell corn at $3.90 a bushel, we made 10 cents, right? If you don't know your cost of production, if you sell corn at 380, you don't know if you're making money or not. So understanding your cost of production for every crop is important. I'm picking on corn because it's easy, but you need to know your cost of production for livestock, for cattle, for dairy, also for some of these smaller crops. If we're doing tomatoes or apples or spinach or peppers, everything needs to have this cost known so that you as a farmer know what point I'm selling and making a profit. So again, these are some helpful resources I hope people find helpful and useful, and they're all free to use. Next slide here is, this is specific to Minnesota, but our Minnesota Department of Agriculture does have tax credits. And the tax credit is given to the seller of an item to sell an item to a beginning farmer. The seller gets the benefit, but it's incentive for them to work with new and beginning farmers. I believe the magic definition of a new beginning farmer is 10 years or less of Schedule F income. Schedule F is just the tax form that farmers put their profit and loss on. But again, we can see that these deadlines in Minnesota, some of them are closing very quickly. It's a first come, first served basis. But if you are renting land to a beginning farmer, you can get 10% of that back as a tax credit. So then on your state taxes, you're paying less in for your income taxes by renting out to a new beginning farmer. So there's some other sales. If you want to sell a tractor, it's roughly 8%. So it's helpful resources. This one is very Minnesota specific, but reach out to your other state departments of agriculture. They have other resources that can be helpful. And the next slide is grants. So in Minnesota, our Minnesota Department of Agriculture has grants. So these are specific to new farmers, new and beginning farmers. We can see last year they awarded some 97 grants for $850,000 in Minnesota. So there's some real money out there to help these new and beginning farmers. Again, this one you have to be a Minnesota resident. There was up to $20,000 for a grant, and you could more or less buy any farm item, fencing, tractors, livestock chutes, a new barn, high tunnels, whatever is specific to your farming needs. If you wrote an adequate reason why this funding was appropriate for you, you could get $20,000. So that's real money to help your farm business moving forward. And this is a grant, not a low interest loan. So it's somewhat free money. So look for these for your specific states. And the next slide is just other credits. So other things that beginning farmers should look forward to or look into is crop insurance discounts. So some of the crop insurance, you can get a 50% discount on being a beginning farmer. Again, some of those, not everyone applies to every discount, but ask around. Also lending, right? If we're doing FSA guaranteed or direct loans, again, in Minnesota, we have the Minnesota Department of Agriculture that does some guaranteed loans where you can get a lower interest rate by having your loan guaranteed through the Department of Ag. So reach out to your state Department of Ag resources and what kind of loans that they can have. They also do direct loans. USDA does direct loans as well, and you're going to be paying a lower interest rate than you would be at a typical traditional bank. Main Street Bank's going to have a little higher interest rates than the FSA or your state Department of Ag's loans would be at. So ask around, look into it. There's resources available for beginning farmers to help them getting started into the farm business. And if we're going to do questions at the end, I'll stick around till then. But Sarah's in charge.
Thanks, Nathan. I think everybody's probably ready to move to Minnesota after that and hearing about all the great things that you have. But I will flag, a couple things. One, at USDA, we do partner with the University of Minnesota a lot. So those databases, those resources that Nathan mentioned, they're really helpful for anybody everywhere. And they create a lot of really great resources that are used nationwide in addition to the Minnesota specific ones. Also, there is probably a Nathan in your state. You just gotta find them. So that's the beauty of extension is it is nationwide and they've got folks who do this kind of work everywhere. So this is a great sort of sampler of what might be available in your state or something like it. And now I am going to hand it over to Chris, who's going to talk more about financing, I saw folks are eager to hear about that. Chris is great. He's the director of Knowledge Exchange at Farm Credit East, and they also they're a unique farm credit, and they offer a lot of really great supportive wraparound services. So he's kind of talk about that and the relationships that are important as you navigate financing. So, Chris, I'm going to hand it over to you.
Okay, great. Can you enable my screen sharing?
Yes. 1 second.
Sure.
All right. Let's see. I will stop sharing mine so you can queue up yours.
Okay.
I think that should work because it wouldn't. Is that what you want, or you just want to slide control?
No, I can do it now.
Great.
Okay, so let me know when you can see that.
Yep, we can see it. You're good to go.
Okay, so first of all, I want to mention that we're not going to be able to answer everyone's questions completely in an hour and a half webinar. But the purpose of this is to sort of whet your appetite a little bit and give you some leads of places to go to maybe follow up and find answers and mentorship and coaching. The first one is your state's land grant extension service. If you look up your state university and extension, you should likely find resources for farming of all different types, as well as for many extension services have resources for beginning farmers as well. Also, every state has a USDA beginning farmer and rancher coordinator that can be found. Help me out here, Sarah, maybe through FSA, or where would you go to find that? Through FSA, most likely. And then the other thing that I wanted to mention is that for business coaching, a great resource is SCORE. It's through the Small Business Administration, and they're not going to like write a business plan for you, but they can definitely give you like critiques and advice on what you're doing. Help you out with your business coaching, help you help you with your venture, whether it's just a gleam in your eye, so to speak, or a business venture that you're already running. SCORE is a great resource. I highly recommend it. You can go to score.org, and I believe you can put in like your zip code or your state and county, and you can find a local mentor through them. So having said all that, and I'll put some of those resources in the chat when I'm done speaking too. Um, I'm going to talk about farm financial management and access to credit. So um, yeah, let's get started. So I'd like to introduce you to the farm credit system. Many farmers, especially beginning farmers, don't really know we exist because we're not a retail bank. We're not a household name. But the farm credit system was established by the U.S. Congress more than 100 years ago to provide stable and reliable credit to rural America and agriculture. And today, the farm credit system provides about 60% or a majority of credit to farmers nationwide. It's made up of about 60 independent associations that are all farmer-owned cooperatives. And we all have defined territories. So wherever you live in the US or territories, there is a farm credit that serves you. And if you go to farmcredit.com, there is a zip code finder where you can type in your zip code or your state and county, and it'll give you the farm credit affiliate that serves your area. So Farm Credit East, our territory is the 6 New England states, New York and New Jersey. But as I said, there's farm credit affiliates that serve nationwide. We serve the northeast corner of the U.S., and we have 23 offices to do that. Just like all members of the farm credit system, we are farmer-owned cooperatives. And one of the advantages of being a co-op member, when you take out a loan, you become an owner of the co-op. And you typically would receive dividends each year based on the profitability of the cooperative. So that effectively reduces your cost of borrowing because you'll get a portion of the earnings of the co-op back. We have a diverse portfolio. The portfolio of farm credit affiliates varies depending on where you are in the country. In the Midwest, obviously, it's going to be more focused on row crops. In our part of the country, we do more with dairy, more with fruit and vegetables, that sort of thing. And the farm credit system also finances forest products and commercial fishing as well, including aquaculture. One of the things that we do that's not quite unique, but maybe a little bit atypical of most farm credits is that we have a full suite of business services. So we provide business consulting, record keeping, payroll, tax prep, and we have a crop insurance division. Some farm credit services offer business services as well, and some don't, but we all offer loans and leases. So we offer traditional loans and mortgages for real estate purchases, equipment, buildings, expansion, transfer of generations. We also offer programs for young beginning small and veteran farmers. This is a priority area for farm credit. The incentives include things like discounts on financial services, payment of loan guarantee fees, which is something that farm credit, we would purchase a guarantee on a loan that was maybe a little bit more marginally qualified, if you will, to allow us to make a deal where otherwise might not work. That often comes with a fee for that guarantee, and we'll pay that on behalf of the borrower. Other farm credits will offer things like discounts on interest rates or different underwriting standards that are more lenient, that sort of thing. We also cooperate with the USDA Farm Service Agency. USDA has a program called down payment assistance that can get the down payment down to as low as 5% on real estate, which can help a beginning farmer. And all farm credit affiliates throughout the country have to have programs relating to beginning farmers. So that's something that is a priority area for us. I'm going to talk a little bit about financial statements. And just to preface it, financial statements aren't everything, but they matter. Farming is a lot more than just a business, it's a lifestyle. And those goals are equally important as financial goals. But if you're not economically sustainable, the quality of your life can decline pretty quickly. So one of the things that I like to say is that financial stability and profitability is a prerequisite to achieving those other non-financial lifestyle goals that you may have when you get into farming. So um, things like financial record keeping can be really important because it helps you think about what you want your farm to yield in money, um, lets you project your farm's financial performance, and helps you forecast how you might repay a loan. It helps you measure progress over time when you compare your farm's progress year over year. It helps you make better informed investment decisions, and good records make it easier to get financing if you need it. They're also usually essential if you're going to apply for any grants. So typically for a farm, you'll want to have current balance sheets, income statements if you have an existing operation, and you'll want to put together a cash flow projection for at least 1 year. Um, go month by month because it's important to avoid, um, running out of cash as you go through the year. A lot of farms in seasonal climates will have a big drawdown in the spring as they plant, and then they might not see revenue until fall when they sell their harvest. So a lot of farms will need to get a seasonal line of credit or something like that that will help them manage their seasonal cash flow. So on the balance sheet, a balance sheet lists all your assets, everything that's owned by the farm, anything that's liabilities, anything that you owe or obligations that you have to pay. And then the result is your owner's equity or net worth. And in the interest of time, I'm going to kind of skip through some of these slides, but they will be available when we send out the slide deck to everyone. So as I said, assets, everything that you own, liabilities, everything that you owe to someone else, and then the result is your net worth. So here's a very simplified balance sheet. This shows, assets that a farm might have. And on the other side of the equation, we have liabilities. And then the assets minus the liabilities equals the net worth. And then here is a much more complex balance sheet that you might see for an actual business. So balance sheets, as I said, they document the value of all your assets and your outstanding liabilities. They're going to be really critical if you're going to seek financing from anyone. And they're also good to do just to keep track of where you stand financially. As your business grows and expands, it's going to become more financially complex, and the balance sheet will help you keep track of that. The balance sheet can tell you about liquidity and solvency over time. Here's again, another more complex balance sheet, which I'm not going to spend time on, but shows you what a balance sheet from a business might look like. So the income statement. The income statement is the next key financial statement that you might see. Similarly to a balance sheet, there's three parts to it. There's your income, your expenses, and then the result of that is your net income. So here's a very simplified balance sheet. It has gross sales, cost of goods sold, or what you put into your product. So in the case of, like, to borrow Nathan's example, a corn farm, cost of goods sold would include things like your fertilizer, your seeds, that sort of thing. In the case of a vegetable farm, it would include seeds, starting plants, fertilizer, production labor is really important, cost of goods sold. That result of that is your gross margin. And then your gross margin is what you have left to pay your overhead and profits. So overhead would be things like equipment depreciation, property taxes, owner's salary, any kind of insurance expenses, those kind of things. Those are things that don't go directly into your product, but you need to budget to pay for them because they're those necessary costs of being in business. The reason we separate those two types of costs is because they behave differently. Cost of goods sold are, like I said, inputs into your product. So they'll typically grow linearly as you expand your production. Overhead costs, they're sometimes called fixed costs because they don't typically change if you increase your production incrementally. Your insurance, for example, for your farm isn't going to change if you grow another 100 bushels of corn or plant another row of vegetables. they tend not to change, or when they change, they'll change in steps as your farm grows and expands and adds property or new fields, that sort of thing. The result is your net margin. And the percent of sales that I had here, the dollars are just an example from a business, and those will vary substantially depending on the scale of the farm. But the percent of sales is kind of typical for a lot of farms. And one of the things is that it shows how quickly the money goes. A 10% net margin is not bad. I've seen anything from 5 to 25% for farms. It's rare to see more than 25%. 25% is really a hell of a return, to be honest. So it just shows you that the money goes quickly, and that's important to keep track of that, because that net margin is what you have to pay things like your principal on your loans, any loans that you have, as well as any reinvestment in the business. So profitability is really important. As I said, cost of goods sold are those variable costs that go into your output. Fixed costs are those that remain the same regardless of variations in your productivity. And then there's just another look at the income statement. What if your gross margin is low? Well, one is that pricing could be too low. Depending on the type of farm you have, you may or may not have control over your pricing. If you're selling wholesale commodities like corn or milk or wheat, you may have no control over your price. It may be set by the commodity markets. But if you're a mixed vegetable farmer and you sell at farmers markets or to a farm stand, you do have some control over your pricing, and it's important to make sure you don't underprice your products. Another thing to consider is your cost of goods sold could be too high. Maybe you're not producing efficiently. And then finally, shrink could be too high. Shrink is really important to keep track of in any perishable industry, because in agriculture, shrink can kill you. Shrink is any product that you grow or make or purchase for resale if you have like a farm stand or something, but not able to be sold. You really need to manage that in any kind of perishable business. And then this is just an example of a comparative earnings statement. This is for a dairy farm, but it just shows we have 5 years of income, and we have our income broken down into various categories, cost of goods sold in various categories, and then this ends with gross margin. On the next slide, we start with gross margin, and then we go through all the overhead expenses, and then the result is our net earnings. And you can see that in this example, this is for a dairy farm. They vary substantially from one year to the next. So that's another thing to think about, is that you'll probably want to use multi-year averages when you're looking at your farm's profitability, because especially if it's driven by commodity pricing, your profitability may be substantially different from one year to the next, depending on markets. So the income statement will tell us profitability of a business, gross sales, and ultimately your net earnings. I'm going to skip through the cash flow projections because I don't think I really have time, and move on to financing and credit. So farm lenders typically will look at what we call the 5 C's of credit. Character is how you've handled credit in the past. That's really important to lenders. They're going to look at your credit report and your credit score. Most lenders like to see a credit score of 700 or better. If it's lower than that, they'll want to look at why it's low. Is it low because you have student loans or something? That's one thing. If it's low because you have a lot of delinquencies, that's something different. A farmer might be reluctant to lend you money if you have a lot of bad credit in your history. Capacity to repay is very important. The lender is going to want to look at what your earnings are today and what will they be after the investment. History is important, whether it's on-farm income or off-farm income. We can definitely take off-farm income from a W-2 job into account for repayment. That's important. Collateral is very important. Collateral is the lender's fallback position. Real estate is best, but many lenders will also take things like livestock, machinery, inventory. Capital is typically the terms of the deal and the down payment. And then conditions are things like how long of a term you're going to get, um, that sort of thing. So those 5 things are typically what lenders are going to consider. Some lenders will add additional requirements, as was mentioned in the Q&A previously. If you're going to the USDA for money, depending on the type of loan, if it's a farm ownership loan, they'll want to see farm experience. That can be gained by typically education, taking classes either at a university or through extension, um, or experience like working on a farm, that sort of thing, as well as possibly running a farm on your own on like leased property or something like that, will be important in order to qualify to borrow for a farm ownership loan through USDA. Other lenders may have different requirements as far as down payment and that sort of thing, depending on the lender. I guess the bottom line is you're going to want to look around and see what your options are. And if one lender says no, maybe another one might say yes. So don't get discouraged depending on the first place you happen to go. Some things to consider when you're borrowing money. One is you want to avoid maxing out lines of credit because the lender won't necessarily extend it if you have a cost overrun. Capitalizing operational losses. This is a big one that we see in agriculture, particularly with older farms. What capitalizing operational losses means is when you have a bad year and you lose money and you can't pay your bills and you need to borrow to pay those bills. It's not unusual for a farm to have a bad year and have to do this, but if you start doing it often, you're going to erode your equity in your farm. So what we will often ask is what's going to change so we don't have the same conversation in 1 year. Do you need to reevaluate your business model? Do you need to look at your production efficiency, your marketing? We want to avoid doing this in succession for years because it's going to erode your equity. You want to avoid financing beyond the useful life of an asset. For example, if you're buying a tractor, I recommend don't finance beyond 2/3 of the useful life of the asset, because if you can't cash flow the payments there, what happens in the last third of the life of the asset? You have repairs. So if you're making payments on the equipment, paying for repairs, and thinking about it replacing that piece of equipment, that becomes very expensive. So you want to ideally have that equipment paid off so you can cover those repairs and think about a replacement. So typically for a loan, we'll want to see the past 3 years of tax returns, personal and business if applicable, personal and business financial statements if you have a business. It's a good idea to review your credit report ahead of time, make sure it's accurate, dispute any inaccuracies on it. And it's good to have a business plan, and it doesn't need to be long or complex. It just needs to have a basic description of the business, a rough cash flow budget, and how you plan to pay back the loan. Being able to pay it back with existing cash flow is ideal. If it's a payback plan based on a projected increase in sales, that's a lot more risky because what if that increase doesn't happen? Things that are kind of lender turnoffs, really poor records, excessive existing debt, bad credit. These are all kind of things that are challenges for financing. So our lending philosophy is that we want to make what we call constructive credit, loans that help businesses be successful and grow, and focus on repayment ability, borrower's character and promise, and we want to focus on continued relationships and long-term business partnership. So with that, I'm gonna leave time for Q&A and the other presenter that we have. I don't want to take up all the time, but here's my contact information. I'll put it in the chat as well, and uh, we can move on. And as I said, you will get this slide deck emailed to you. Sorry, I couldn't spend more time on every slide, but we got an action-packed webinar here.
We do. And thanks, Chris, for covering all of that. And we'll have some good questions for you in the Q&A about working with lenders. So financing is always a hot topic. So up next, we've got Corey, who has a really, really interesting farm and has used a lot of USDA programs, and is a veteran and was referred to us by our state beginning farmer and rancher coordinator in Pennsylvania. So maybe I hope you cover working with the coordinator a little bit. But Corey, I'm going to give you slide control and hand it over to you so you can talk about yourself and your farm.
Thank you, Sarah, and appreciate Nathan and Christopher's presentation, both partners that I've had along my journey as well. So just a quick overview of my farm and kind of how I went from nothing to something, I guess. I live in northeastern PA, so our farm's in northeastern PA, a small town called Tunkhannock. We have a fairly small operation when you look across the country and some of the bigger farms. We have an 87-acre property. We have about 50 head of cattle. We originally had Angus. We moved to what's called Dexter cattle. They're about half the size of an Angus, and we focus really on a niche market. All seed stock. We sell to a variety of different customers. Most of our cows, actually all of them at this point, carry the A2 milk genetic. So we get a lot of people making specialty cheeses, to opening ice cream parlors, to selling livestock for Airbnbs, just a wide variety of different customers. We enjoy it. We love it. It's part of like who we are as a farm. Each customer we get has a unique experience. So my family and we started in 2019, end of 2019, so we're on year 7 currently. We went pretty much took over the family farm, which was traditionally dairy, conventional, and went to Angus. Then we moved to the Dexter cattle, to a no-till regenerative ag model. So we don't do any conventional tilling or farming at this point, and we are at this point 100% grain free, except for a couple goats we have on the farm. So that's kind of a little bit about us. We do have about an additional 20 acres of pasture that we utilize on a neighboring farm, and then also an additional 10 acres of crop fields that we use for hay. Kind of focusing on what this is, building the bench. I've had a unique experience of being able to have a lot of successes and failures through this journey, being able to do a lot of these projects myself and bring in a lot of partners along the way. A lot of those relationships I still have today. A lot of people in these positions, whether it's NRCS, county conservation, state programs, the people change. I don't want to say frequently, but there's a possibility that somebody on your bench could move on to a bigger, better role. I've had all great experiences. I think one of the positives of having a very the harp on both Nathan and Christopher's point, I spent a lot of time on a business plan initially in my business, so I had a very clear direction, and I had a lot of things on paper to kind of help guide. Not to say that I haven't changed that along the way, but that does play a very key point. Everybody you go to for any type of funding is going to ask you, what do you want to do? Where are you going? And I think that's super important to figure out initially, and just have a good idea. It's again something that can change over time. So what I want to do is kind of talk about some of the you know, my bench. Who are some of the big players? I dread this point. I'll probably leave somebody out, and they're probably sitting on this presentation currently, but I'm going to try to hit as many as possible. I find a lot of new ones every month, every conference, every time I speak to any of these partners, I find out a new partner, right? So you're always growing, always finding out new contacts. So biggest one that I've had right off the bat has probably been NRCS, mainly, and I talk about that in the sense of the beginning of my journey. I found out about NRCS, really through the Dexter farms that I purchased my initial cows off. So all my cattle are purchased from across the country, from West Coast, East Coast, down south. So my whole entire herd has come from outside of Pennsylvania. I visited a lot of these farms and saw some of these programs actually in working, or like, whether it's a heavy use area, a watering system, a conservation stewardship program. I've seen a lot of these in works, really just sitting on the tailgate, talking to a farmer that I was buying cattle off of. So, I didn't really know much about NRCS until the first time I went to one of these farms and saw and heard about some of these programs. So, that was part of my business plan, right? Go out to other farms and get an idea and sense what's out there. And I don't really call any Dexter cattle farmer competition. They're friends, and they're good friends. So NRCS was something I heard about, I explored it, and then I kind of got linked into the PA Veteran Farmers Network in Pennsylvania. Every state, I know I'm speaking a lot about Pennsylvania specifically, but every state will have some kind of veteran network. I linked up with my local state veteran network and actually attended a conference. Was the first conference I attended transitioning out of active duty military. And I was overwhelmed by the amount of resources and lots of programs. First time I heard of farm credit, first time I heard of FSA loans, facility loans, just a lot of different programs that are offered not just for veterans, but for everybody. So a lot of these programs I'm starting to understand. I had a lot of problems. I had a traditional farm that was kind of overgrown, 20 plus years. So there was just a lot of stuff to do. The infrastructure was getting old. At the time it was exciting and fun. I think as I look back on that, I was probably more stressed out over the amount of problems without solutions. I think when I look, where I am today, a lot more comfortable, seeing this vision, progress and get better. So another big partner for us was the county conservation, huge, probably one of our most consistent um, partners along the journey. I've had essentially the same people from the county conservation in all 7 years. They kind of bridged the gap to be able to transition from, different partners along the way. They help bring them together. Your local county conservation most likely deals with all of these partners on a variety of different projects. So that is actually one of the first. NRCS and county conservation are probably the two first partners I would link up with in starting your journey and building your bench. They're a big connectivity to everything that you want to accomplish on your farm, and then also programs that they want to help accomplish their goals on the conservation side. Nonprofits, again, I mentioned PA Veteran Farm Network, but also I was an award recipient for Farmer Veteran Coalition grant. It was an initial fellowship grant that I received right off the bat to help me with some infrastructure challenges I was dealing with. So, again, there's probably different coalitions out there. There's grazing coalitions, right? So I'm mentioning veterans, but if you're not a veteran, there's probably a grazing coalition or a regen ag coalition that you have within your state or region that you might want to link up with that has resources for you to take advantage of. And then, and Nathan mentioned earlier, and I see there's extension everywhere. I cannot, not mention Penn State for the amount of technical support I received from them as well. Just getting started, just learning like some of the basics of anything from grazing. Penn State Extension was one of the first resources I went to regarding some of the initial planning and other resources I needed initially. Christopher, I mentioned farm credit. I think everything I've done on my farm has been essentially through farm credit. So Horizon Farm Credits in my area, they've been a great partner, super flexible, understand the challenges of agriculture, what's needed. My last project was a heavy use area. I had over a $350,000 operating loan for that. So there's a lot of stuff that goes into that, and then a plethora of contractors. I've had a lot of contractors on the way. Private from planning. Some of these grants require plans. I didn't really know much about planning at the time, especially on the agricultural side. I've had a lot of contractors involved in the planning side. So that's just kind of a snapshot of where my bench is, and I can't stress, there's a lot of others that are involved in this, but these are some of the big players. Next slide. Thanks. Um, so these are just a snapshot. I want to talk a little bit about these programs and probably take, the next 5 to 10 minutes to kind of talk about what kind of partners are involved. On the NRCS side, I've done cattle walks, water lines, stream crossings, fencing. So, those are some of the basic like equip projects, but there's a lot of others. Some people do pollinator fields and, there's a ton of other different programs that provide, there's a lot of forestry projects through NRCS, but these are the specific ones that I utilize. These were the first ones that I kind of, got into the conservation world. And why am I fencing off my stream? That's where my cattle get water from, and learning the ins and outs of what it means to take care of resources on your farm. State Conservation Commission, again, great partner. I have a really good point of contact there. Chris helps me a lot with, he certifies a lot of programs for the state. So there's been times when I might not have had an NRCS representative actually on projects. I've had county conservation that stepped up. I was ran into an opportunity to be able to get funding for a heavy use area. The county conservation stepped up real quick, helped me get a nutrient management plan, which is a prereq in order to get a heavy use area, or as other people call it, barn. So there's, again, that's a perfect example of where you have good resources and a good bench to be able to sit there and assist you, so you don't miss a good opportunity. So I've also had utilized the what's called REAP in our state. I'm not sure if it's called the same thing in other states. I think there's a federal REAP as well, but at the state level, you can get tax credits for doing projects on your farm. I'll sit here and say, yeah, I don't do a single project on the farm that's out of pocket that I don't have a REAP credit for. And those credits can be sold to corporations, typically 70 cents to the dollar, or you can use them if your spouse or somebody else in your family has a W-2 income. You can utilize those to help you fund other projects on your farm as well, and at the end of the year. So my most recent Department of Ag, I got a farm vitality grant. So we're actually in the, I guess I would say, the planning phase for potentially starting a retail aspect to our farm and doing some kind of value added aspect. So I have been approved for a planning grant to be able to help get that next level of contracting or those subject matter experts to improve our business plan. So that's something else you might have within your state. And they actually, most of those programs have some kind of business planning aspect to them as well. So you can definitely learn a lot from them. I mentioned the Farmer Veteran Coalition as well. There's a lot of grants out there that aren't just veteran related, but there's a lot of grants out there if you look for them. Again, most of these I found either through talking through someone, working with my county conservation, working with NRCS, or attending conferences. Farm Credit, mentioned them, but I also received a grant from Farm Credit. They the local one, and I don't know if this is nationally, but they run what's called a Jumpstart grant. I received a $10,000 grant and I used it for equipment purchase. We traditionally were a square bale only farm. I bought the first on my farm round baler, and it helped go towards the cost of a round baler for the farm. So, that's big too. Again, something else that's from I guess I'll say private public sector aspect, but again, another resource out there. NRCS, big one. I did a heavy use area. I had kind of dual funding for this. I had equip funding for I put roofed heavy use area, but it's official terms, but it's essentially an outdoor barn. So again, like I said, we were traditional dairy. We've moved to um, having a beef operation. So we have a roofed heavy use area that was funded not only for equip but through ACAP as well, which is another grant program through my state. So again, just a wide variety of different funding sources. There's probably, for every one of these, there's probably two that I haven't applied for. And I just say that and echo that there is funding out there to do these things. You just have to go out there and find them. And then again, a lot of it that goes back, I'll go back to the business plan side of it. A lot of these require that you have a really good idea of what you want to do. And that's where I kind of When I talk to everybody and they ask me, hey, like what's one of the big hiccups, or what's one of the suggestions that you have, it's building a good business plan, because when you go to write any of these grant applications, most of these questions are about why you're doing this, and making sure like what's your vision, right? Everybody wants to know exactly what you're doing and get excited about it with you. The most recent contract that I just signed was actually it's a conservation stewardship, so a CSP program. I'm doing both an ag forestry program where I'm literally replanting all of my riparian buffer, which is that space between in the stream, typically a 35-50 foot buffer off of your streams that you have fenced out. I'm replanting all of that and getting rid of invasive species, as well as I am replanting about 25 acres of forest that has different species of trees that have died off, and so we're going through that process. And really with these, I'm at literally about 100% of my acreage is in some program or has been in some program. So that's just the kind of an overview of the different opportunities that I have utilized so far. Again, I probably missed a couple, but there's a lot. There's a lot of resources out there, and I think that's what everybody on this call should take is you have a lot of not only funding opportunities, whether it's the fund projects or grants, but you also have a lot of technical experience. Going back to Penn State, I also utilize their business planning group there that, I think it's a grant, but it's given to Penn State, and they actually help with business planning side, and that's through the extension as well. So that's a huge resource there that's free. Yeah, I didn't pay for that resource, but it definitely helped me collect ideas and kind of narrow down my vision. Next slide. I don't know if I can do that. There we go. So this is kind of an aerial photo of my farm, not the one that's closest to the bottom, but the middle, where you see the kind of the woods that goes up the forest there. Again, 87 acres, it's not a lot, but when you're doing a lot of work on the farm, 87 acres is a lot. So uh, there's a lot that goes into it. Uniquely, just talking about technology, flexibility, when I initially started this journey, I was at Fort Benning. I was in not OCS, but basic officer leaders course. And I didn't have the opportunity to meet with my NRCS representative at the time. So I had somebody do drone footage for me of all of my property. And I was able to walk through and plan with my NRCS representative through aerial drone footage. So it was kind of a unique opportunity, but again, just overcoming another barrier. Next slide. It's kind of an overview of just the property. That red outline is kind of a stream that goes through it. And then these are some of the paddocks. It used to be a continuously grazed farm. So all of those green paddocks used to completely be one big pasture. So I've kind of broken them down. I have cattle walk, stream crossings, and then that farmland that's in the top left corner is also land that I also use for my operation as well. Next slide, if it'll go. So just kind of real quick, I just want to go through some of these practices, what they look like, give you ideas, and then talk about the people involved in them. This was a REAP project, again, a tax program that we have in our state. This is part of the riparian buffer area. So a lot of our property was 15-foot multiflora, invasive species. We literally took a forestry machine and cleared out all the pastures to regain control of them. And now those are all luscious green pastures we use for cattle grazing. But this specific area, right where that tree is part of the riparian. It's now fenced off completely, so the cows don't access that area. Next slide. Thanks. Sorry, I don't have control of that. So if you can move those slides for me. This is kind of facing up towards well, this is a different picture. This is more of the riparian area that we had feconned different invasives out of. now currently fenced off. This was when we first got started. The people involved in this, I had local conservation or county conservation. I had NRCS. And then I had a state person who never really actually was on site, but was helped me with a lot of technical aspects. But for the REAP program in our state, it's signed off by actually our local county conservation. So there's a lot of different things that locally they were 10 different hats, not just focused on one thing. So they're definitely a resource that I would have on the bench. Next slide. Water line projects. So again, I had engineers for NRCS involved in this. I had this was also part of this was also a REAP project. So there's two different people, and then I had a contractor involved in this as well. So I had equipment rental for this. So I had some people that were helping me walk me onto the right piece of equipment that I needed for this work, and I call it the Tonka suite. Most of these projects I ended up with a plethora of different machines, whether it's an excavator, bulldozer, skidster. So again, a lot of different players, and just it's not simply just putting in a water line, but there's a lot of different technical aspects of it. Each of these practices, whether it's NRCS, REAP, county conservation, they all use practice sheets essentially. What are the right specs to put into this project? Um, you know, to do it right. And obviously these are inspected, so there's different, materials that you have to use, and they have to meet certain specifications. So there's always a person that I have found on my bench that I can call and say, hey, what do I need for this? And they can easily walk you on. So, I don't try to do anything myself anymore. Again, there's a ton of resources there locally, federally, at the state that you can lean on to help you accomplish whatever you're trying to do on your farm. Next. Just another picture of a frost-free hydrant, part of that water line. There's a water line that runs into an existing structure. This is a barn that, I don't use anymore. I have, the new heavy use area. Next slide. Next slide. That's the after. Next slide. That's one of the watering systems. We use mirror fount water systems. My dad for years used to use hoses and a hammer to break the ice out of bathtubs. So this was our first automatic heated water that we had on the farm. This area that you're looking at right now is actually doesn't exist anymore. That's actually where our new heavy use area is, which is 190 feet by 50 feet. So it's big, and we no longer use hay rings on our farm. We move them through a rotational grazing system, and if we need the rest pastures, we move them into that heavy use area, and that's where we feed them currently. So, huge change from us going from, bathtubs and hoses to, a heavy use area where we can keep our cows and allow our pastures to rest. Next slide. Next slide. This all used to be 15-foot multiflora, and you can see kind of the fencing projects we did. There's a stream right behind that fence that you can't see. It's kind of overgrown, still overgrown actually, which is one of our new grant programs that we're involved in. Um, Go down, next slide, please. Next slide. Next slide. Just gonna move through some of these so we can get some Q&A. This picture right here, go back one more. Go back one slide, please. So this is what it looked like before. The barn's painted now. We've done a lot of work to kind of, I'll say, the aesthetics or beautification of it. But in the background, you'll see in between that gray pole barn and the barn, kind of right to the left, you'll see where there's prepping for the pad. I will say most of these grants, I would say 50%, if not more, of the work I did myself. Actually, for the heavy use area, probably less than 20% I probably did, but all of them I've done some aspect by my own work. It's definitely, if I could go back, there's times I probably would have contracted it out. I can certainly say in a lot of these grants, like you're not going to, make money on these grants. You're going to end up spending a lot more than, the grant itself. So I think that's something you need to, when you talk about building a bench, I met with a lot of contractors to get numbers, right? So contractors play a huge role. How are you going to fund that while the project is getting done? There's farm credit was huge in that aspect. Like what am I trying to accomplish? I've leaned on cattle before in order to get loans. So, there's a lot of different creative ways in order for you to be able to accomplish your goal, but also, you need to understand that it's also a business. And there's people out there that can help you really understand that. So I did all the excavation aspect as well as the like stubbing of the water lines, the underground outlets in that sense. And then I had a contractor that actually built the heavy use area. You can go to the next slide. And right there is almost finished heavy use area. Like I said, you see these, all around in my state. They're very huge up in my area. A lot of places, might not have these setups at all. But for our area, a lot of the local farms, you're having one, if not two, sacrifice paddocks. So you're essentially, browning out pasture that could be, utilized in your operation, but rather it's a place to contain animals. That specific spot had like 4 feet of manure and was a barnyard, so it was a pretty big resource need. And this is probably 5 years ago, and we just finished last year. So year one, we were already thinking, hey, we need a heavy use area, looking at our business plan where we want to be numbers wise for cattle. So those are all things, like I said, where do you want to be when you're looking at your projections, profit projections? What does an operation look like when you're done in the growth phase? Those are all important. And through this whole process, I've had so many people on the bench be able to narrow this down for me. You don't have to have all the answers. I'll end by saying, my plan A, my wife and I were going to open up a farm to table restaurant. Little did we know that COVID would hit. So, COVID changed the restaurant industry, I'll say forever, especially in our state, between forced shutdowns and, a lot of people never recovered from that. For us, plan B was always to sell. Registered livestock. And we landed on our plan B. Our plan B is now plan A, right? And we have a plan B to go retail. But at this point, our plan A is focused on registered stock. So, whatever your operation is, whether it's, vegetables or sheep or cattle, like any type of livestock, or, have always think through like, something to fall back on and what that looks like. Like I said, there's a lot of resources out there, a lot of funding opportunities out there, a lot of opportunities to meet with technical experts. And, I'll end by saying, the best thing to do is to get out there is to make the phone call or to attend a conference. Just get out there and really get to talk to people. It definitely, you'll get a lot of resources by, just getting out there and taking the opportunity to put together a good plan. I think that's it. It's another couple more pictures.
Awesome. Well, thank you, Corey. That was really helpful. You did a great job of sort of bringing it all together. We always like to have a farmer on our webinars because y'all make the best presentations and you can really share your experience and yeah, pull it all together for folks and bring it to life. So we've got a few questions in the Q&A. If folks have more, um, please feel free to drop them in the chat. We got a little bit more time, but I've got a question for each of you, and then we'll see what else comes through here. But the first question I've got is for Nathan. Since you work with so many beginning farmers and do that programming, what type of support or expertise do you think people forget about or overlook that they shouldn't?
I think it depends a little bit farm to farm. I do think people overlook um some of the cost of production. Like you're like, oh, I love driving tractor and planted my seeds and stuff, but they're like, I actually need to analyze like profit and loss. And it's like if I don't think about that, it's really easy to post things for sale. I'll pick on corn again. All right, the market's 350 today. I'll sell it. Well, you have to make sure you're all selling at a profitable level. If you're selling below cost of production, you're not going to be staying in business very long. So cost of production, I think, is one thing that really people need to understand and know for their own farm, right? It varies a lot from farm to farm. So where are you at? I don't care where your neighbor's at. What are you at?
Thanks. Chris, we've got a question for you. I think probably some folks may be a little bit intimidated or feel like their relationship with their lender might need to be like really formal. Do you have recommendations or advice for folks to help them build those like personal relationships with the lender and develop those communication and make sure that they understand their operation?
Yeah, absolutely. Speaking for myself, excuse me, and I think most of my farm credit colleagues, um, you don't need to necessarily be fully ready to apply for a loan before you begin the conversation. We're happy to talk to a potential farmer or a farmer that's thinking about financing but not sure what they want to do yet, and talk about some ideas and options, and say do these three things and then come back and see me, or that sort of thing. We'd like it to be a little more focused than just a dream. But if you have like some sort of plan and an idea of where you want to go, we're happy to talk about how you're going to get there. So don't feel like you need to have everything in place before you come and make the first phone call or that sort of thing. We're happy to have a sort of preliminary meeting and just go over some options and that sort of thing. And I think the same would go for like USDA Farm Service Agency as well.
Thanks, Chris. Yeah, and we always encourage people to just like keep that dialogue open. If you make a change in your operation or you add an enterprise or you want to add something, talk to your loan officer. I'm a farmer. I text my loan officer. Like, it's you don't just like have to make an appointment and like come in once a year. Like they're there for you, and you want to be able to have that kind of relationship where they can reach you and you can reach them, and you've got that back and forth. Let's see. Corey, we got a question for you in the here, and there's a lot of programs and grants out there. Um, what did you ever have to deal with like pushback from NRCS or FSA, and kind of how did you navigate that?
Yeah, absolutely. That's a really good question. It's probably the question I get the most. I will say, fortunately, I have a really good bench. Essentially, I have really good people that I've worked with in the past. I have had, there's things you want to do as an owner operator. Like if I wanted a cattle walk to go here and it sits in a floodplain, I had that. No, that's an example that I've had. The engineer's like, "Hey, you can't put that there," and I'm like, "Well, this makes the most sense for me." We compromised on that. So I will say that, there is that. I've heard stories of, I'll say like the people that come in and this is how you have to do it. I have never had that experience with any of the programs that I've been with. There's always a way to tactfully navigate those. And if there is, something that makes sense, right? Most of these programs, if they're providing money to you, they're trying to do the best for the taxpayer, right? It's essentially all of our taxpayer money. They have certain priorities for their program, right? They're, trying to fence off streamlines, or they're, trying to, plant certain diversify tree species, or, keep the critical runoff areas from, hitting the streams, right? So you're essentially trying to merge your goal of having a productive and profitable farm with hitting these conservation practices that you're utilizing in order to help you get to where you want to be. So there's in my mind essentially a compromise, you have to have at some point in time. You're taking maybe certain land out of practice. So there's a way to compromise, but navigating that, it's I've never had something that it's so bad that I'm like, I'm done, I'm not using this program. But there has been times that I've, had the conversation and have essentially always landed somewhere, where I was happy and the program was happy.
Thanks, Corey. And this can either be for, I think Nathan and Chris are probably well positioned to answer this question. There's a question here about LLCs. And do you need to have an LLC to get a loan? And I think it'd probably be good to just touch on where folks should go to get some support around entity formation.
Yeah, want me to tackle that one first? So I would say that close to half our customers operate as sole proprietors, meaning that they're not incorporated or have an LLC for their business, and that's fine. They're just operating under their own name, Bill Smith, whatever it might be, and they farm and everything kind of goes through their personal um, individual status. Having said that, becoming an LLC or an S corp makes a lot of sense for a number of reasons. There are certain tax advantages as well as some liability protection that you get when you form an LLC. And so it's worth at least looking into, I would say, for a farm that has any substantial revenue. That's kind of my take on it, but it's not absolutely necessary.
Yeah, I would agree with what Chris said. It is not necessary at all. Like Chris said, a lot of farms don't have any entity structure set up. The reason for an entity is the liability protection is a big one. And my advice to farmers is think on what your goals are. Like, don't create an LLC just to create an LLC. Use your goals on what you want your business to look like, or what are the goals of your business moving forward. And then if an entity will help accomplish those goals, then go ahead and create one, but don't just do it for the fun of it.
Very good advice. I hear folks are like, I gotta form an LLC because everybody told me to form an LLC when like they don't really understand why they should have one or like what that does for them, or they didn't form the right kind or like make the right kind of declaration to the IRS when they form. So that's really good advice. We have just a little bit of time left. And looks like we've cleared the chat. So I guess I will ask you all for some parting thoughts, or you can answer my big question, which is if we're talking to somebody who was getting ready to start a farm, who would you tell them should be like their first like phone call or email and why?
I can kick it off. I would recommend going to either their local extension service if their extension service has a program for beginning farmers, or SCORE, to put together a basic business plan. SCORE isn't going to help you with the farming part of the business, but they can definitely help you with the dollars and cents part of it, which is really, really important. And I see more farmers, particularly beginning farmers, get tripped up with the financial management of things more than because they're bad farmers. They're usually good at growing stuff. They just aren't good at things like budgeting and cash flow and that sort of thing.
I do think that extension is a great resource. Obviously, that's who I am employed with. We do have a lot of good advice. I would also suggest that if you are a beginning farmer and you want to get started, talk to another farmer. Talk to someone who's in the same field. If you're going to raise cattle, talk to a cattle farmer. If you're going to raise cut flowers, go tour some cut flower farms and say, hey, like what worked for you? What didn't work well for you? Most often other farmers are very helpful and they can guide you with, hey, think of this or this or this before you get started. It'll say, hey, this didn't work well for me. Do something else.
Yeah, and to find those farmers or those mentors, start going to like farm bureau meetings or farmers union or some of those farm organizations are a great way to network and meet older farmers and kind of hear about what they're doing. And many of those groups also have beginning farmer programs too.
I'll just add to that. I think there's like three really good resources initially right off the bat. Um, to narrow down your vision, what you want to do as a business, I would say easily, go visit another farm. Find in my case, I have a couple people on, one hand I can go to if I was, interested in doing something, and they would tell me, hey, that's a really horrible idea, or it's a really good idea. So that kind of helps lead me along the way. But county conservation is definitely, for me in Pennsylvania, that's a huge one because it's typically a one-stop shop. You have technical expertise there as well as, there may be funding opportunities or they can lead you to a place for funding opportunities, right? Or for technical experts. And then NRCS, your local NRCS. I've had several NRCS representatives. It varies on how long they've been there or what and if how close they are with their county conservation. But typically they're kind of like a duo that's essential for you to get started. If you're new and beginning.
Very solid advice. Well, thank you all so much for joining us. Thank you to our audience for joining this webinar. Just as a reminder, this was recorded. It will be posted online. It just takes us a couple weeks to get captioned and editing and everything. Everybody's emails were there, so you can follow up with folks if you've got questions. But thanks again to our presenters, and thanks to everybody for joining us, and have a great afternoon.